CAFR, Ken Sun.
So before we get started, I just wanted to make a couple comments on this. As you will recall, I believe it was in the first meeting in May that we had brought this item to the council for receive and file. There was some questions from the public as well as not enough time for the council to review the CAFR, and so we said that we would set up a special time so that we could have some discussion related to the CAFR, allow the council to formulate any questions if they had any, and also allow any other members of the public that had questions to submit them to our office as well. I wanted to take some time and talk about the role of the auditors here. It's the role and the responsibility of these auditors to be completely independent and not in terms of their relationship with staff or even council, to remain completely independent. And so each time any audit firm comes into any agency, whether it's the city, this city, any other city that they go into, their reputation and their integrity is on the line. And so for them, there's a huge amount of responsibility on their part to make sure that when they look at the items that we've prepared for them, that they are reviewing it through an independent lens and that they have no connection in terms of any sort of relationship with city staff or city council. I talked to Ken earlier today, and it's the most that I've talked to Ken in probably about the last 4 years that I've experienced my professional working relationship with Ken. Prior to coming to the city of Hemet, I did spend 8.5 years in the city of San Bernardino. As many of you know, the city of San Bernardino did go through a bankruptcy and went through multiple auditing firms, and it wasn't until the Poon Group came in and actually completed the audits during the bankruptcy process. And it wasn't until they completed their audit of the city's financials that the bankruptcy court actually allowed the city to exit bankruptcy. And so it was largely as a result of the independent auditing firm of the Poon Group that they were able to get San Bernardino and allow them the audits that were necessary to get them out of bankruptcy. So with that being said, I know that the Poon Group is very ethical, and they take these types of matters seriously, not only for the city of Hemet, but any city or agency or governmental agency that they work for extremely seriously. And so when it comes to this, like I mentioned, the reputation, the integrity of this auditing firm is on the line every single time that they do any sort of work for any public agency. So I just wanted to make sure that everybody knew the standpoint of their role. It's not their role to work for us, it's their role to be independent and analyze and review the documents that we've prepared in the financial statement. So with that being said, I will hand it over to Ken Poon from the Poon Group.
Thank you, Chris. And one other thing, we'd like to make a correction. We are reviewing the 2017 and 18 CAFRs, not the 18 and 19, because we haven't started the 18 and 19 CAFRs yet. So make that corrections. Again, thank you very much for having me here at our last meeting back in May 14. It's kind of beneficial for me being out here to do a workshop, kind of walk you through the whole entire comprehensive annual financial report. The acronyms for this is the CAFR, so that you are able to take responsibility, understand all the numbers, where they come from, and getting understanding of a bigger picture of the financial condition of City of Hemet during the fiscal year end June 30, 2018. Just a little bit more background about myself. I have been practicing in public accounting for 20 years. And of the 20 years, 18 of those are really focusing in the governmental sector. So I've been, since 2012, I started my firm, the Poon Group, and then since then, currently we have a team of 40 professional and a couple admin people. We totally have about like 45 people servicing the governmental sector. At the current time, we are servicing about like 40 cities in California and about like 40 special districts throughout California. So a couple of those, including City of San Bernardino, including your city here, I did a lot of high-profile audit in the governmental sector. So including City of Stockton since the bankruptcy, we also service City of Stockton, City of Beaumont, City of Placentia, City of Industry. There's a lot of high-profile clients that our firm is currently handling, and all of our city is really grateful that we provide them value-added service so that they can take a closer look at the audit and look at all the findings that they got and improve their internal control and improving their operating and operating condition for the agency. So let's kind of walk through the whole entire comprehensive financial report, because this report, I can tell, like giving a short period of time, you are not be able to read through that with a couple days. Even I myself, with 18 years of experience in governmental sector, it takes me about like one full day to really read through and review the financial statement and making sure that everything is in alignment with the generally accepted accounting principle that we followed. So let's talk focus back a little bit about the audit. So I know this report is break it down into three sections: the introductory sections, the financial sections, and the statistical section. Our focus here is really the financial section. So we are basically looking at your numbers, looking at the internal control, doing a lot of audit procedures that, to make sure that we are comfortable and obtain sufficient audit evidence to make sure that these financial are fairly presented in all material respect in accordance with generally accepted accounting principle. And keep that in mind, even though even we issue an unmodified opinion on the financial statement, doesn't state that the agency is in good financial health. So I'll basically walk you through the analysis and kind of answer any questions that you may have. But before I do so, I would also like to take this opportunity to kind of walk you through my audit process. So in order for us to obtain sufficient audit evidence, it's not coming here just to work with your finance department, gathering a bunch of information, looking at the trial balance, and issue the audit report. There's a lot of procedures that we perform. We basically break it down into four phases. The first phase is what we call the planning phase of the audit. The planning phase is actually throughout the whole entire audit, but usually happens at the very beginning of the audit process. So we evaluate not only the unique transactions happening during the fiscal year at the city side, but also at the same time we identify the applicable GASB pronouncement that is currently being implemented during the fiscal year. For the fiscal year end June 30, 2018, there is a major accounting principle change that's require a restatement in your financial statement, restatement of your beginning net position of the city. So I'll also walk you through the GASB statement number 75 a little later on. So during the planning phase, we also take a look at the whole entire city, discussing with city management in back when we performed the 2017 and 18 audit. We basically talk to Lorena, which is your finance director, to obtain a great detail of what's going on with the city during the fiscal year, so that we would be able to plan accordingly and identify the areas that we focus on during the year. The second phase of the audit, after we complete the initial discussion with management, then we come out here to talk to your accounting staff and then also prepare for the field work audit. One of the requirements, as in the AICPA auditing standard, requires us to perform risk assessment on for the accounting system, in your accounting system, so that we will be able to focus on the high-risk area. One of the things that the AICPA kind of like disallowed the auditors to do is to default everything to high risk, and we just coming in and look at things at like doing substantive testing on the account balance that you had at year end. So a bunch of procedures that we perform, including the understanding of the entity and the risk associated with it. Then we come down to the internal control process. So during the internal control process, interim phase, we identify like 5 key areas, which what I call the significant transactions class. The first class is the financial reporting, which identify include your month-end close, your year-end close, how you perform your journal entries, and how you perform your bank reconciliation, so that we can identify all the areas of weaknesses and focus on the high-risk area during the financial reporting purpose. The second area is really the revenue and cash receipt process. So we basically going out to all like your cash receipt location, identify the key control and all the revenue cycle, including your water fund, because water fund has a lot of revenues coming in compared to your governmental funds, including taxes, the grant revenues coming in, and those are probably a lot easier to audit than your water fund revenue. So that's why when we look at the revenue cycle, we pay a lot of attention in test of control over your water billing system to make sure that you do have proper key internal control within the system, so that we can rely on the internal control and do substantive analytical procedures on the water fund for the revenue part. So that we, instead of sending confirmation out to the citizen, because a lot of time sending confirmation to a citizen is really cumbersome, and also a lot of confusion saying, hey, what's up with the city? I'm receiving another letters coming from the city saying that I owe them this much money. So it's not really the case. So it's really trying, like we trying to find an alternative procedures to audit the water revenues to make sure that those are consistent throughout the years. Then coming down to contract vendors and cash disbursement process. So we basically go through and start with your purchasing policy and go through that purchasing policy. We talk to your purchasing manager, talking to your AP person, how the vendors got paid, and some of the contract, how you manage the contract itself too, is what I call the contract management. So we identify, kind of go through the whole 9 yards and talking about purchase requisition, the purchase order, how it was being handled, until the vendors coming in and present the city an invoice, how it was being recorded to your AP system, and how the vendors got paid. So those are actually another big cycle that we focus on, because besides the payroll system, the capital asset purchasing are the biggest item. Like capital asset purchasing is the biggest item, and construction in progress is the biggest cash expenditure item that the city has. So that's why we also focus a lot in those areas. Then coming down to payroll. The human resource, the payroll, we identify the key internal control from within, because a couple of things that we also do testing on is the census data. As I said in my last meeting, there are 2 big numbers that are completely based out of estimate, which include the net pension liability and the total OPEB liabilities. So those 2 liabilities are really based out of your census data, like the actuarial, to determine the total liability outstanding that the city owes, so that we will be able to record that accordingly in your financial statement. So those are heavily relying on your accuracy of your HR records. So we spend significant amount of time and looking at the census data. On top of that, and identify key internal control within your payroll system, so that we are able to confirm that the information in your payroll system and the records that your actuary got from the city to estimate those pension liabilities and the OPEB liabilities are fairly, so that there's they will be able to do their job properly. Because first of all, I'm not an actuary, so that's why I'm not be able to speak for them on how they utilize it. But it's very important the age group, when they got hired, how they compare to your MOU, and this is exactly how they determine the liability outstanding. And last but not least, we also go through a general IT internal control. Technology become a really important area in the finance operations, because you have a big gigantic financial accounting system. You have different modules. How the different modules interface with your general ledger system. We actually do have an idea of like how's the control over there, in order to avoid having someone that is not authorized to enter any transactions to the system. So we do actually get an idea of the separation of the duties within your financial accounting control. So those are the 5 areas that we focus on. Then we determine the risk based on different assertions. So assertions including the existence and occurrence, the completeness, the accuracy and cutoff, the presentation and disclosure. Those type of assertions is actually will be like, we need to do the risk analysis on each of the major account, including cash, including your receivable. We want to make sure that those assertions is being risk profile, so that we can focus on the higher risk level. So having said that, then once we finish up all the risk assessment, we have a good idea of what the risks are, and then we'll come up with our audit plan. So phase 3 is really focusing on the numbers and the audit support. So before we come out in the field, we basically coordinate with your finance team to gather the trial balance, the detail to support each significant account balance, so that we will be able to test the total population for the completeness, and then also at the same time we are able to select our samples for testing purpose, to gather the evidence supporting to support the amount and disclosure in the financial statements. So definitely we are not 100% test of all of your transactions. Is the higher the risk, the more that we focus during our year-end phases. So at the end of the day, like, is thinking about filling up a bucket to fulfill our responsibility. So we finish up our risk assessment based on the risk level. We also fill up the bucket with the supporting documents, so that we are able to say that your financial statements are fairly presented in all material respect in accordance with generally accepted accounting principle. Okay, so before I move on to the financial statement, because the financial statement is really our phase 4 of the audit, because the city do hire us to, besides auditing the financial statement, but also at the same time assisting the city in compiling the financial statement in accordance with GAAP. So a couple of things that we need to identify is, one is independence, because when the audit firm is actually preparing the financial statement, we always do have a threat to independence, and one is what I call the self-review risk. The only way to get around this is that the city do have the skill, knowledge, and experienced person to oversee our service, and at the same time we do need to have our safeguard from within our firm to mitigate those self-review risk. Besides myself, I'm the engagement partner. We do assign two partners that is not associated with this audit, so that they are able to look at the whole entire report, and give out comments to the audit team so that we want to make sure that we address the self-review risk appropriately and perform our safeguard. The two individuals that actually look at our these financial statements include Gary Capricci, which is one of the really reputable person at the government industry throughout California in the 90s, and now he has over 45 years of experience in the governmental accounting. And then also our EQCR partner, the Engagement Quality Control partner, Jack Georger, to look at it too. And both of them, combine the two of them, including myself, is definitely over 100 years of experience in looking at these numbers. So that's why we want to make sure that and on top of that, the EQCR and myself also look at the work paper, so that we want to make sure that we comply with the auditing standard, and also the city also comply with all the accounting standards. So the report actually break it down into three different sections. The first sections is the introductory sections. Your finance director, Lorena Rocha, actually prepared the transmittal letter, and basically talking a little bit more about the true fact about the city. And then coming to page 9 of the sections is IX. You do see there's a certificate of achievement for excellence in financial reporting. The city actually did submit your CAFR last year in 2017 for the GFOA certificate program. And based out of the GFOA program is actually, the report is actually reviewed by 3 different individuals, and they go through a 50-page checklist to make sure that the city not only meet the minimum requirements of what GASB require, but also go above and beyond on the disclosure, such as preparing the introductory sections, and then also spending significant amount of time to prepare the last sections, which is the statistical sections, for a couple reasons. One is accountability, and the second part is transparency, so that the people at your city, including elected officials, all of you, will be able to see the trend of what's going on in the last 10 years. So the city did actually receive the award. Obviously, no one's is perfect, so based out of the 3 reviewer, they do provide some really valuable comment, and those comments are also addressed in this particular CAFR, so that the CAFR is the CAFR actually did submit it to the GFOA for the award program for this particular year, 2018, and the city is awaiting for the results from those review. And then page 10 is the org chart, and then page 11 is all the elected officials and the key administrative officials directory. So going into the second sections, the first document in the financial sections is our independent auditor's report. So the first paragraph is really talking about what's the scope of this audit, what we actually audited, what are the opinion units, and we identify those in the first paragraph, which state that we audit these financial statements looking at a couple of different opinion units, including the governmental activities, the business type activities. Keep that in mind. These two activities are what I call the consolidated financial statement of the city as a whole. So the governmental activities, which include all your general fund, the special revenue fund, debt service fund, capital project fund, and then also the internal service fund included in the governmental activities. And then leaving the business type activities is because the city only have one enterprise fund, so the business type activities is pretty much equivalent to your water fund. It's only as a matter of fact the presentation of couple accounts will be moved, so that but at the end of up-to-date, the total net position and all the classification in the financial statement are pretty much the same as the water fund. And then also, as required by GASB Statement Number 34, we are required to opine on each major fund. So, which is we need to do a calculation of what's included in the major fund. So, for the fiscal year end June 30, 2018, we identified 3 major funds. One is general fund. Second is the sewer and storm drain funds. And then the third major fund is the water enterprise fund. The rest of the fund is what we call the aggregate information. Will be consolidated and we identify as one fund instead of looking at those funds individually, so that we can opine on it respectively. Coming down to the second paragraph is the management responsibility and then auditor's responsibility. I don't want to spend a significant amount of time talking about those because I think last time I spelled it out pretty clearly in bullet points. And then going to page 2, which start off from on page 2, the first paragraph, it's our audit opinions. So the audit opinions actually state that the financial statements are fairly presented in all material respect in accordance with generally accepted accounting principle on each opinion units, which include the governmental activities, the business type activities, each major fund, and the aggregate remaining fund information of the city. As of June 30, 2018 for the balance sheet, and then also for the respective change in financial position, which is your income statement for the fiscal year. And because the enterprise fund, we also do include a statement of cash flow. We also opine on the statement of cash flow too. So we are comfortable that these financials statements are fairly present in all material respect. Coming down, the second paragraph, which is the emphasis of matters. In the emphasis of matter, we would like to point it out to the city that because of the implementation of GASB Statement Number 75, we do need to restate our beginning balance as of July 1st of 2017 net position balance. The reason why we want to do a prior period adjust the restatement for this is you don't want the whole entire gigantic total OPEB liability to hit your income statement all at once during the fiscal year, and this is not a this is really not a ERAS, is implementation of a new GASB pronouncement, so that we are required to go through a retrospective application of this liability to the financial statement, so that you don't see a whole entire $47 million hit to your income statement in the current fiscal year. So it's kind of like going back to like the beginning balance, or going back to the respective years where it should be. Okay, and then in other matters, in the financial statement, there are also what I call the required supplementary information. The required supplementary information do include a couple things. One is the budgetary information for the general fund and all major special revenue fund, which is the 2 major funds that we identify in the governmental activities, which include the general fund and the storm drains fund. Those, because this is a governmental fund, it is required under the GASB, you need to show the budget and actual, including the original adopted budget, so that you can see what you adopted, the final budget, and compare it to the final results. And then also, there are a couple other items that's required under the GASB Statement Number 68, which is the pension standard, and then the GASB 75 on OPEB standard. The city is a participant of CalPERS, so there are certain schedule that is required to be presented, including the schedule of the contribution, and then also the schedule of change in pension and OPEB liability and related ratios. Those are included in the financial statement. Even the required supplementary information are unaudited, but we do actually take it very seriously and trace it out to the appropriate document so that the amount presented is tied into those audited financial statements. Other information on page 3, which actually including the introductory sections, the statistical sections, and all the combining individual non-major fund information as presented in the supplementary information. We also do have a in relation opinion on the combining statement, but we did not opine on the introductory sections and the statistical section. So it's spelled it out pretty clearly on what our responsibilities are. And last but not least, the last paragraph is because the city has expended more than $750,000 in federal expenditure. So when we perform the financial statement audit, we are also required to perform the audit not only under the AICPA generally accepted auditing standard, but also at the same time the governmental auditing standard, which is a much higher standard that we require to go through and report the internal control deficiency if we identify those, the compliance issue. So there will be a separate report which is already spelled out in your single audit report, which is a separate report that we issue and identify those issues. So these are my the opinions of what the Peering Group is actually doing for is opining on your financial statement. Starting from page 5 to page 14 is about like a 10-page analysis. Is what they call the management discussion and analysis. Is really prepared by your management. It's not really something coming out from the audit firm, but instead of reading a close to a 200-page report, these 10-page is really the key for the council to understand what's going on for the city for the fiscal year end June 30, 2018. It's kind of walk you through in plain English and telling you, okay, what's going on at the city, what GASB requirements that is applicable like lately, and how it was being presented in these financial statements. On page 6, you can see a lot of different bullet points and talk about like different financial statement. Spelled it out pretty clearly. The government-wide financial statement, which include the governmental activities and business type activities, which is at the high level, consolidated level. And then going into the fund level, you break it down into 3 different types of funds: the governmental funds, the proprietary funds, and the fiduciary funds. And then on page 7, you can see how it was being reported in the financials, the information, what's included, what's excluded in the financial statement, clearly spelled it out in a table format on page 7. But now I would like to take a look at the page 9. That is really the analysis piece coming into play. GASB actually require the city when you prepare the MD&A at the very high level. So it's not really like focusing on all the details. So basically in table 1, you can see this is a condensed statement of net position, like break it down by current and other asset, the capital asset, the deferred inflows and deferred outflows, the total liabilities, and then as a result, what is the remaining, which is your net positions. Very clearly spelled it out on page 9. And then page 10 is your income statement at the consolidated level. Total revenue earned during the year compared to prior year, and break it down by 2 different activities and the total primary government. So, and then also on page 11, you can also see the statement of net position on how it was being classified. Because of the implementation of the new GASB pronouncement, GASB 68 about like 3 years ago, and then also the GASB 75 for the current fiscal year, it kind of take the city's unrestricted net position into a deficit position of close to $96 million, of which another the restricted, which is restricted by third party, usually is your grant money, by enabling legislation, your gas tax dollar, about like $55.3 million, and then the big chunk is really your non-liquid asset, the net investment in capital asset of about like $272 million. So page 11. Going to page 12, you can see all the pie chart. I like the chart so that you can see where the money's coming and going and the allocation, and then also kind of give you some analysis of what that makes up those numbers. Starting on page 13, it coming down to the major fund, and there's like as I said earlier, there are 3 major funds that we identified: the general fund, the major special revenue fund, which is the sewer and storm drains fund, and then also the water fund. So those analysis is starting on page 13 and 14, and basically on 14, you want to know about the liability, the long-term liabilities of the city. So basically, this is a really nice chart. Kind of glad that you don't have a whole lot bonded debt. So you do have, however, the biggest liabilities that the city is facing is your net pension liabilities and your OPEB liabilities compared to your capital lease, your claims payable, your compensated absences. Those are really, really minor compared to those 2 big, gigantic liabilities out there. So kind of give you a flavor. Everything is in plain English so that you will be able to understand the analysis from management's point of view. And we do actually use this analysis as part of our audit process, because we need to perform the analytical procedures and making sure that we understand the whole entire financial position of the city. Starting on page 18 and 19, this is the balance sheet for as of June 30, 2018 for the city at the consolidated level. Total asset, $413 million. Total liability, $159 million, resulting the net position of $275 million. So as you can tell, there are also 2 other elements called deferred outflows of resources and deferred inflows of resources. Don't want to make that too complicated. Thinking about the deferred outflow of resources is something that is prepaid, and then the deferred inflow of resources is just like you unearn. So it's a bunch of actuarial assumptions that was being made and needs to be amortized in the next couple of years, instead of ruining the financial position, like ruining the presentation of your income statement. So the GASB actually did allow I hate to say that they're using a smoothing method over the rolling 5 years period on these change in assumptions and change in the actuarial experience. So those things are actually included in deferred inflows and deferred outflows of resource. So when we take a deeper look at the liability, as you can tell, you don't have any bonded debt, so which is really a great thing. So you don't rely on debt for your capital asset, but also the biggest liability, as I said earlier, $47 million in the other post-employment benefit, and then $97 million in your net pension liabilities. Those added up to close to about like $150 million that the city is responsible for. And that's kind of driving this is really a driving factor for being the unrestricted going into a deficit position for the fiscal year end June 30, 2018. Okay. So the next item that I would like to focus on is page 20 and 21. This is your inflows and outflows, how much that the city earned and how much that the city expends during the year. So let's take a look at the governmental activities. Total expense $71.8 million, which is also not the whole entire $71 million are actually supported by tax revenue. Some of those can be recovered by the charges for service, which you can charge the user for a fee, or either you can get the grants to pay for it. So for the fiscal year end June 30, 2018, you do actually recover about like $22 million to support the programs that you have. So as a result, for the governmental activities, we are just looking at all your general fund, your special revenue funds, debt service fund, and capital projects fund, and then also we consolidate the internal service fund into the governmental activities. So at the end of the day, the net cost of service is about like $49.6 million. But when you take a look at the total taxes that is earned on page 21, you only have $43 million. That means you don't have enough to support all your programs that you currently have. You are actually exceeding your tax revenue, and let's also take a look at the investment earnings and some other miscellaneous revenue coming into play and transferred in from the enterprise fund, total of $44 million. So it's still not be able to cover all the expenses for all your programs that you provided. And also, let's take a closer look at your water funds too, because your total expenses for the water fund is about like $12 million. And supposedly the water fund should be self-sustainable. So, but at the end of for the fiscal year end June 30, 2018, as you can tell, the total revenue is only about like $10 million. There's about like a $1.5 million short. So that means when you do your budget, when you do your rate analysis, take a closer look at it. But keep that in mind. But there are also non-cash items flowing into the water fund, which is the depreciation item. So, but ideally, you should actually leave the water fund at any of the city. I'm not asking you to make a profit, but highly recommend to be a self-sustainable, at least breaking even. So, at the end of the day, the total change in that position between both governmental activities and the enterprise activities dropped by close to $7 million for the fiscal year. So the net position dropped from $282 million to $275 million. I can tell the big part is still the pension and OPEB. The expense run through the financial statement. Then starting on page 23, you see the fund financial statement. First part is the governmental fund financial statement. So on page 29, this is the balance sheet for all the governmental funds, which group by three columns. The general fund, which is the main operating fund of the city. As of June 30, 2018, you do have about like $20.8 million for total asset. Net of the liabilities of about like $4.1 million, resulting the total fund balance of $16.7 million. I know the $7.9 million because of enabling legislation, because it's one of the measures that the city passed, and the $7.9 million is the measure you, right? Measure $6.9 million from the measure you. Yeah, because one of the things what I would like to point that out to you about the detail of the classification is on page 85, note 11. So the city do have couple like going back and forth between 29th and page 85. Those are the breakdowns on what are the money restricted for, and 6.9 is for Measure U, $1 million for public access channel, and then also the city, through a resolution from the city council also set aside $8.2 million for economic stabilization reserve. And then also there are about like a $220,000 for continual appropriation from the previous fiscal year. So at the end of the day, the unassigned fund balance is about like $256,000. So your general fund, as I said, is pretty healthy as of this point. Let me take a look at the ratio. Compare. So the general fund reserve ratio, I would call it a rainy days fund ratio, calculating by counting all the available fund balance, including the committed, the assigned, and unassigned. So the total between those three categories is about like $8.7 million. Your total expenditure is about like $46.5 million for the fiscal year for the general fund. So your ratio is about 18.73%. I can tell it's good ratio, but it's not good enough, in my opinion. You do actually meet the GFOA, the best practice benchmark, which is 2 months of reserve, which is about like 16.67. My recommendation is always at 25%. So there's still some work that the city needs to do to raise this ratio up to a 25% ratio. So the sewer and storm drain funds, as of June 30, 2018, $11.6 million, and liabilities, $2.3 million, resulting the total fund balance is all restricted for the sewer and storm drain purposes of $9.3 million. All the rest of the other funds, because they did not meet the criteria to be a major fund, are consolidated into a non-major governmental funds. So it's not that we don't break it out, the detail. The detail is actually in the supplementary information. So you can actually see, starting from page 103 to page 169, you can see all the breakdowns and details, and then also for those governmental fund, you did adopt the budget for it. You also see the final budget compared to the actual amount. So give you a really good analysis and detail so that you are able to tell why. Like, for example, the equipment replacement capital project fund, the city adopted a budget for $230,000, but the city did actually spend for $689,000. There's a reason for it. So you can actually go back to going back to the finance team and ask, what's going on with this, and why we adopt a 230 and our expenditure is $689,000. So something that you to help you out in analyzing based on the schedule presented in the supplementary information. Page 31. Let's go back to page 30. The fund financial statement in the governmental fund, we are preparing this based on the current financial resource. So basically, all the long-term asset, long-term liabilities are not included in the fund level. So and this is what we call the modified accrual basis of accounting. So it's not a full accrual basis. So that's why on page 30, in order for us to reconcile between the fund level to the government-wide level, there's a lot of things hidden between the two schedules. So we do have a reconciliation between the two. Couple things. For example, in the fund level, you expense all the capital asset item because through the capital outlay account. Those items are not recorded on the balance sheet in your governmental funds, but they are recorded on the balance sheet in the government-wide financial statement. So that's why you see there's about like a $311 million a reconciliation, an addition back from the fund balance level to the government-wide level. But also at the same time, there's a bunch of liabilities, including the compensated absences of $2.9 million, the pension, including the deferred outflow resource, the net pension liabilities, and deferred inflow of the resource, all netted to about like $67 million. And same thing for OPEB, $33 million. And then also the internal service fund, because majority of the internal service fund is probably a cost allocation. So any residual is going back to the governmental funds. So the $3.7 million is going back. So at the end of the day, how am I going to go from the fund balance of $67 million going to the net position of $272,000? This is everything that we show, so that there's a tracing back to the record itself. So all these numbers can be traceable from within the report. Page 31 is the income statement. So total revenue for the general fund, $50 million. Total expenditure, $46 million. So at the end of the day, the general fund actually have a $3.5 million surplus. And then netted out the transfer in from other funds, at the end of the day, you bring in another $256,000. There's an increase in fund balance of $3.8 million. So your general fund is still, in my opinion, is still pretty healthy. Your sewer and storm drain funds, you bring in about like $4 million. The cost associated to maintain the system is about like $2.2 million. As a result, it's a $1.7 million increase in your fund balance. So total 9.3 fund balance is restricted for that purposes. So other non-major governmental fund, $11 million, but also at the same time, the total expenditure is about like $12 million. As you can tell, majority of the outlay is coming, like it's really your capital asset purchase. The city actually did purchase about like $3.4 million using those grant funds to fund your capital project. So at the end of the day, the change in fund balance of negative $1.3 million. So bringing down the non-major governmental fund from $43 million to $41 million. So, and then also you can see the total column. Similar to the balance sheet, we also do have a reconciliation from the income statement. What are the changes from in fund balance to change in net position in the governmental activities? So we bring it up to $4 million, like when we talk about the capital asset, when under modified accrual basis of accounting, your capital asset is an expenditure. So in order for us to convert from a modified accrual basis of accounting to a full accrual basis of accounting, that needs to convert it back to from a income statement to a balance sheet. So that's why we bring in the $3.7 million out from the expenditure and record it as a capital asset item on the balance sheet. Also the depreciation, because your fund balance, your fund financial statement did not account for any depreciation in your capital asset, for your capital asset. So for the governmental activities, there's a $7.1 million. There are some revenue that did not recognize in the prior year, so 75 actually brought back in. The change in OPEB, the change in pension expense, the 2.3, and then the 6.7. And then also the bring in the internal service fund residual, $2.7 million. So at the end of the day, the fund balance, you do have about like $4.2 million, but accounted for all the majority are non-cash item, and the liabilities, it brings it down to a deficit of $5.4 million for the current year operations. Starting on page 35, it is your proprietary fund, your enterprise fund and internal service fund. The enterprise fund, what you have is the water fund, the only enterprise fund that you have. So as of June 30, for these proprietary funds, you are using a full accrual base of accounting, so it's no difference than than any commercials and the business type activities. So we don't need to do a reconciliation between the two. So as of June 30, 2018, the water fund do have about like $16.3 million in total asset, of which about like $4.1 million are capital asset, and then the other 12 are majority cash and your receivable. Net of liabilities, current liabilities about like $2.3 million. Long-term liabilities about like $11.7 million, and keep that in mind, the net pension and OPEB liability, the enterprise fund also do have a piece of it. So as of June 30 of 2018, the water fund account for the pension liabilities of $5.1 million, and then also the OPEB liabilities of $6.6 million. Those are actually based on a actuarial allocation, so it's not like depending on how many employees that you have in the water fund, and those are allocated to the funds. There's also deferred inflows and deferred outflows of resource. Those account for the actuarial assumptions change during the year. And then last but not least is net position, your equity. So the investment in capital asset, $4.1 million, and as a result, you do have some deficit of $845,000. Which is not ideal because, as I said, this fund should be self-sustained and should be like, you should have a positive, unrestricted net position. And then coming down to the internal service fund, the internal service fund actually is what I call it's a cost allocation. Instead of booking to the fund directly, you do actually separate it out so that as a cost reimbursement basis. So including the administrative, the facility maintenance, vehicle maintenance, the workers' comp, dental, vision, retiree medical, and liability insurance. Those actually every month the city do charge another fund so that they can transfer it to set aside the money to pay for those services. So at June 30, 2018, you do have about like $9.3 million in total asset. Majority is cash, $8 million, and then you do have about like $1 million in fixed asset. Total liabilities, about like $14 million, and the biggest piece is still your pension and OPEB, $5.4 million for pension, $7 million for OPEB. As a result, the net position is about like $3.8 million, of which $1 million is the capital asset, and then you have an unrestricted deficit of close to $4.9 million. Income statement, page 38. Your water fund, you generate about like $10 million. Your total operating expense about like $12 million, and as a result, bringing down from your operating results is $1.3 million operating deficit for the year. So there are some investment income and some transfer out back to the general funds to pay for the general fund service. And at the end of the day, still like a $1.5 million of operating deficit. So bringing down from $4.8 million to $3.3 million. Take a closer look at your internal service fund. Actually, this year is actually improving because internal service fund is a cost allocation, and at the same time, the net position should like closer to zero is better, so that you can do the actual cost allocation. So for the current fiscal year, total operating revenue charging to other departments, to other funds, about like $14.5 million. Total expenses of $12 million. So there's some catch up from the previous deficit. So bring up from $6.5 million of deficit to $3.7 million of deficit. And because the financial reporting model is what we call the economic resource, is more of a long-term approach. So how about changing from accrual basis to cash basis? How much that the